Tesla stock closes out another trading day with a 5% gain. There has been 4 consecutive trading days in the green, and I think this is only just the start. Tesla stock could rally exponentially from here. And it comes off of recent developments within Tesla. And I don't think they're being fully appreciated by the markets yet. And it's one of those things that will catch up to investors relatively soon, if you ask me. So I want to give you guys the inside scoop on what I'm looking at here, why I'm so bullish on another rally with Tesla, but also at the same time, guys, we got a lot of hawkish Fed speakers today. This cannot go unacknowledged. And the biggest thing that I find kind of concerning is that we were not going to hear from Fed Jerome Powell for weeks. But all of a sudden, we're getting an unscheduled speech coming tomorrow morning, which might be alarming. So we're going to get into everything you guys need to know about Tesla. We're not going to skip any corners here in this video. We're going to talk about how high I think it could go, why I'm bullish. We're going to look at the option activity. We're going to look at hedge funds, institutional investors, what they're doing, all of that. So stay tuned, sit back, relax, enjoy yourself, a coffee or whatever you're drinking on. No judgment over here. But let's dive into it. So Tesla, like I said, is up 5% on the day. It's been a couple strong days with Tesla, and the volume has increased again slightly compared to what we've seen in 2022. This is a positive thing, right? But the stock is still down from the higher levels we've seen around 220 just in February of 2023. And after the recent developments that we just got, I think the stock should be a lot higher. And to be quite honest, I think it's going a lot higher. Now, why? Okay, we just had news a couple days ago that Elon has hired a new CEO for Twitter. This is the one that's kind of hands down in your face obvious. This is bullish. The fact that Elon sold more Tesla stock than all of retail combined in the last year to fund the purchase of Twitter is not really a positive thing. But add on top of that, Elon taking his time away from Tesla and focusing on Twitter so much, that was also a big drag to Tesla. A lot of big shareholders, billionaires, were calling on Elon to do this, to appoint a CEO to Twitter, because we need someone to run Tesla. The California retirement system pension fund manager was literally going on CNBC saying this, that we're going to sell Tesla and recommend that all of our clients do that if we don't have a CEO running Tesla. So this is the obvious one that is very bullish and very encouraging. And I think this is what is mainly fueling a lot of this rally that we have seen so far. But I think this is a very small factor in the grand scope of what we're going to say next. Wait for it. Advertising. Now, I know what you guys are thinking to yourself. If you live in a state like California, where almost 70% of new vehicles sold in 2021 and 2022 were Teslas, this doesn't mean a whole lot, because everyone basically knows about Tesla, what the product is, the goods and the bads. It's well known, okay? But for a vast majority of America, for a vast majority of the world, they have no idea the product of Tesla. They might know it's a car company, but they don't know about the features of Tesla. They are uninformed to what Tesla actually is. So, while a lot of investors think that Tesla has a demand concern, I think it's going to be the opposite here once they start to advertise. Because if you live somewhere like I do in Michigan, where gas vehicles are everywhere, I might see one Tesla every week. I might see 2 Teslas in a week on a good week, right? And that's why I was so bullish on Tesla in the first place. It's not because they're popular in California or big cities. It's because they're not popular for vast majority of Americans, of the world. Again, I think emphasis on that, and that's why I repeated that. But when people do have the knowledge on what a Tesla is, the safety features, the self-driving features, all of the things that we invest in Tesla for, once the population has a taste of that, you're going to see sales explode at Tesla. So this is not like a hypey kind of catalyst. It is, but it isn't, because it's going to take a couple weeks, a month or two to kind of get some of this to roll in. And that's if Tesla started to advertise immediately. It might take a little bit of time. But once Wall Street catches on to this trend that I am telling you, it's going to be off to the races for Tesla stock. And the Tesla demand concerns are going to start to sound like a production concern. That there's going to be so much demand that production will not be able to keep up with it. So that's what I think Wall Street is missing out of what we got from the shareholder meeting. Now, as far as what's going on with Tesla and the option activity, you've seen 403 orders totaling $1.03 billion with a positive order value of 56% here today. Now, these are institutional orders. These are guys with a lot of money. So a lot of dollars are flowing into Tesla. This could also help contribute to this upside rally that we have started to see. Now, if you take a look at certain option expirations, like this Friday, May 26th, you will see the open interest is almost 55% calls, 45% puts. The volume today was almost 60% calls and 40% puts, so definitely looking more bullish than not. Take a look at the expiration of June 2nd, 2023. Things get even more bullish. Open interest on the call side is 56.5%. Open interest on the put side, 43.5%. The volume today, 65.21% calls, 34.79% puts. So about a 2-to-1 ratio. For every 2 calls being placed on Tesla, you were seeing 1 put. If you go a little bit further out, you're still seeing the volume today on the June 16th expiration of 58% calls, 42% puts. If we go to the next big option expiration after that, July 21st, 60% call volume, 41% put volume, and for August 18th, you're getting 67.68% call volume, 32.32% put volume. So over the next coming weeks here, you are getting some bullish positioning with institutions and hedge funds in Tesla stock. Now, if we take a look at the short interest, because this could very quickly turn into a short squeeze kind of situation, estimated short interest of free float sits at about 2.84%. Now, the short interest percentage does not matter as much as the amount that is sold short in Tesla. Tesla has $13.87 billion of short positions betting against them. This could drive some bullish buying pressure if the stock does continue to go higher. And I think, again, I'll refer back to advertising as something that is not priced into Tesla stock. Tesla stock is not pricing in a lot of demand coming from advertising. That is an upside story. And that is really what my bullish thesis right now is based off of. I think the market should be pricing in a bullish effect on Tesla's fundamentals based off of advertising when that does start to kick in. I think from the market's perspective, this rally is happening right now because Elon is no longer the CEO of Twitter. I think that is, if you wanted to boil it down, what's happening now with Tesla. So that's what we have for you guys here on the day. That's what's going on with Tesla. As far as Fed speakers, earlier in the day, today, you had a bunch of Fed speakers. Fed Kashkari says a June pause on rates wouldn't indicate an end to the hiking cycle. Does go on to say that, in quotes, if we were to skip in June, that does not mean we're done with our tightening cycle. It means to me we're getting more information, he said. So basically that data dependency being reiterated by Fed Kashkari. But other members today, such as Bullard, he was really the hawk that crushed the markets in 2022, signaling at one point where we're going to see 6 to 7% Fed funds rates. He came out today and said 2 more rate hikes would be appropriate. And you also had other Fed speakers that reiterated the same data dependency, may or may not have to hike again. But on top of that, I think the most telling thing is Fed Jerome Powell. If you look at the economic calendar, he was not supposed to speak tomorrow. And now he is. It's not coming up on the calendar. But tomorrow, I believe around 11 o'clock in the morning, could be wrong in that timing, Fed Jerome Powell's going to speak. And it's at a Democratic Congress, or conference. So usually when that happens, it's because Powell wants to get a message across in the markets. And I think if you were to imply on what we heard today from Fed speakers, that message would be, we're not done raising rates. Now, I find this interesting because Fed Powell on the last FOMC press conference was asked if they get information before the general public. And Fed Jerome Powell surprisingly admitted that yes, they do get important data points before the general population. And we're going to be getting core PCE coming in month over month for the month of April on Friday. You're expecting that to come in at 0.3%. Last month's reading was 0.3%. If Fed Powell got this data, it makes sense why Fed speakers are coming out and taking this hawkish stance. And maybe, just maybe, Fed Jerome Powell tomorrow wants to condition the markets for possibly another rate hike coming at the next meeting. Because if you look at the probability of another rate hike, it's really not there. 74.3% of investors are expecting the Fed to pause. That would be breaking expectations. If the Fed did raise rates and markets are expecting a pause, the Fed has not done that, broke market expectations on what the bond market is pricing in, what these numbers you see here, in about 40 years. So they typically go with what the markets are expecting. That's why they try to course markets into expecting certain things. So I think that's a developing story. On top of that, the debt ceiling. McCarthy came out today and said a lot of back and forth statements. Said that maybe they'll get a deal done, but they're far from getting a deal done. That Democrats are holding this up. And a lot of very contrary information. If you look at something like Kevin McCarthy's Twitter, bunch of comments here that don't sound encouraging. President Biden doesn't think there's a single dollar of savings to be found in the federal government's budget. He'd rather be the first president in history to default on the debt than risk upsetting the radical socialists who are calling the shots for Democrats right now. Let's not get political here, okay? This just does not sound good for raising the debt ceiling. And we're going to be getting a meeting with McCarthy and Biden today at 5:30 p.m. So we should be getting some updates here over the next half an hour, maybe 2 hours from now on how those negotiations are playing out, because time is really coming down to the wire. And as a lot of people have pointed out, Congress is probably not going to act until they're forced to. As we've seen in history, they don't really like to react until the markets react, until the bond market reacts or the stock market reacts. So we're kind of just waiting for something to happen to force them to come to an agreement. And I think that just isn't a good stance for the market. So there is some bearish things happening right now that could put a damper short term on any potential Tesla rally. Another thing that I don't think is necessarily a positive thing. Maybe it will be, but right now it's not looking like it. You're going to have AI companies reporting earnings this week. Now, AI has really driven this market higher. AI has affected the largest companies in our markets. Think Meta, think Google, think Microsoft, think Apple, think Nvidia, think even Tesla. They've all benefited from this AI hype. And Nvidia is going to be reporting earnings on Wednesday, as well as Snowflake. And Nvidia was really the one that led this rally. Nvidia is up like 200% from its lows, almost at all-time highs. By far the best performer out of the AI companies, at least the big companies. If Nvidia has poor earnings or don't live up to market's expectations for AI, this could put a damper on the whole entire market. Okay, so that's also something I'm watching for. And again, Nvidia reports earnings Wednesday in after hours, as well as Snowflake. So there you have it. Like I said on Tesla, I'm very optimistic on where we are right now. And I think right now is a fantastic opportunity to buy into Tesla. But it's going to be a rocky road, at least until the debt ceiling is over with. We can put that behind us, and Nvidia reports their earnings and hopefully doesn't sour this market. Next key level on Tesla for this upside rally is going to be that 200-day moving average. That 200-day moving average at $202 per share. If Tesla can break out from this level, which would be a rise from the current price of $188.63, of about 7%, if you get a gap up above that in a rally with momentum, that's where we could start to talk about $250, $300 per share relatively soon with Tesla, guys. So none of this is financial advice, a recommendation, none of that. You guys know the disclaimer here. Tesla could go to zero in a very wonky world. Anything's possible. Do not listen to anyone you hear on the internet, and always come to your own conclusions before investing your money, guys. So that is it for this video. Hit that like button and subscribe to the channel if you made it to the end on your way out of this video. Comment down below. Let me know if there's something I am missing, something that is making you bullish on Tesla stock. Thank you for watching again, and I will see you in the next one.